Agreed, guys. So this is not a drill, okay? SoFi accidentally released their Q1 earnings results 5 hours early. Literally, I have it right here, okay? So I'm gonna keep it really zoomed in so you guys can see it. Let's just go through the numbers because I'm so excited. Net revenue saw 330 million of 69%, okay? But adjusted net revenue is actually what I wanna talk about. This is $322 million, up 49% year over year. This is massive because it's a massive beat for them. Do you remember in their Q4 earnings, whenever they actually put out their guidances, I have it here, their adjusted net revenue was supposed to be on the low end, 280 million, to the high end, 285 million. And they said, well, if the moratorium was around and we could still do our student loans, then it would be upwards of $320 million. Well, that moratorium didn't go away. In fact, it actually extended, but yet they beat all expectations. Not only did they beat the high side for no moratorium, but they beat the high end with the moratorium, if the moratorium wasn't even there, and yet it wasn't, and they still destroyed the numbers. This is absolutely amazing. Adjusted EBITDA of $9 million was positive for the 7th straight quarter in a row, okay? So very, very exciting as well, especially whenever you look back, they were expecting on the high end of $5 million. They actually hit $9 million, right? So extremely exciting for SoFi. Member growth also beat my expectations. I was expecting somewhere closer to 330 to 360,000. What they saw was 408,000. So not as high as last quarter, but still a massive beat in terms of my expectations, going off of the amount of downloads that Sensor Tower thought that we were going to get. Obviously blew that out of the water as well. That led to a quarter end member growth of 70% and total product ads, which I didn't really account for at all. I didn't really have a number or expected amount of growth, although 84%, well, what we saw almost 700,000, but 84% year over year is a slowing from what we saw during the pandemic of everything was up over, the triple digits, right? Everything was doubling quarter over or year over year, but still, this is still amazing growth numbers. But this is the line that I want you guys all to remember, okay? Management raises full year 2022 guidance. Now, this is super exciting because the stock absolutely getting crushed right now. But the reason why they're getting crushed is because one of their biggest competitors, Upstart, actually just got killed because they cut guidances on their most recent quarter, which happened yesterday. This is the opposite for SoFi, okay? SoFi is expecting beating its earnings, yet obviously this doesn't relate or really, account for what people are seeing in this latest quarter because they halted guidance or halted the actual trading. So we'll have to see, whenever it actually catches up. It probably won't resume at all today because of the earnings leak, but hopefully tomorrow we'll see what happens to the stock. Anyway, back to the actual thing. So this video, for the most part, I'm just trying to rush this out because I want to get this out to you guys as early as possible because there's so many exciting things. Obviously, this is still a net loss company, okay? But it is better than what we expected. We expected loss per share of 18 cents a share. What we saw was a loss of 14 cents a share. So that was a beat on the bottom and top line. We both saw beats and guidance has gotten improved. So if this stock continues to drop, I will go bananas. Like, that is just ridiculous. We saw triple beats across the board. Anyway, still down at $4 a share. It's just ridiculous. Going through, I also saw Noto also spoke about, how they're doing with the actual deposits into SoFi checking and savings, which they also saw, deposits raise up to $1.2 billion. This is amazing because we're a chartered bank now, so we can actually use that money to fund our own loans. That's the amazing part. And since what he also said here, he said, this is actually accelerated since we raised the actual interest rate to 1.25% for their customers in the checking account in April. That's not even a part of Q1. That's part of Q2. So he's actually giving a little bit of a hint towards the next quarter saying this has actually gotten even faster. It's growing even quicker now since we've done this. And also another point he says is that the progress that they made since the acquisition of Technesis, he said, clients' response to the combination of Galileo and Technesis value proposition has been quite positive so far, and we're excited to leverage this new partnership to execute on our goals of building the AWS of fintech. What I also saw scrolling through here is the technology platform accounts, okay? This is Galileo's accounts, which actually grew 10% quarter over quarter or 58% year over year. So this is also still very exciting. The growth on this, this platform is so linear. It's just amazing. It just continues to climb up, doing exactly what it was supposed to do this whole time. Very, very exciting stuff. And continuing to go through, we also see lending products rose 20% year over year, which is actually up from the 18% that it grew from previous quarters, okay? This is the 4th straight quarter of accelerated year over year growth, primarily driven by continued growth demand in personal loans, okay? And you can actually see this whenever we scroll down and actually look at this. Let me find it over. Okay, we'll look at this first. So you can actually see personal loans are not actually the fastest category growing, but they're by far the biggest. So whenever you are growing by 27% in this category, it's absolutely massive. Home loans is a bigger category, or bigger, growth rate, but it's such a small category for us, so it doesn't really make too much of a difference. Now, whenever we actually look at the origination volume, you can see how insane this actual personal loan growth is, which actually led to a total of 30%. So even though we actually saw massive losses whenever it came to home loans and a little bit in student loans, obviously, because we're not getting any new, student loans for the most part because of the moratorium, but personal loans just absolutely blowing it out of the water, keeping us afloat in that 30% ranges. This is another category that I wanted to show off, okay? Financial services segment results. What we saw was net revenue of $23.5 million. Now they can show off and tote their 264, percent growth year over year, and that's amazing. But what we also saw is that it was 21 million from last quarter. If you look at any other of the financial services companies like Robinhood, for example, they're seeing massive losses this quarter because of, transaction expenses were super high, crypto got destroyed, so many other features that if I took some time to actually research, I could find. I can't think of it off the top of my head, and I'm not editing this video because I want it out soon. But this is a massive beat quarter over quarter, even though the rest of the industry got destroyed. SoFi is a standout here, okay? We cannot be compared to the other competition. We're different. We're just built different. Now, there are just so many things that I want to talk about. I'm going to make a full quarter breakdown, but I just want to make sure that we get this quarter out, very, very quickly. What I see here in the growth whenever it looks at their financial services segment, money is growing absolutely insane. Invest still growing 112% year over year is just incredible, okay? Credit card holdings, this quarter over quarter still growing immensely. It was 91,000 last quarter, now 117,000. Okay. And this referred loans, this is also what I want to show off. Last quarter, it was 7,600, now at 17,000. Okay. That's 125% beat here. Quarter over quarter on referred loans. This is our partnership with Pagaya. Okay. Very, very interesting. At Work also grew. I think that was around 33%. I think it was around 30,000. So a 33% growth quarter over quarter for our SoFi At Work. All very, very exciting. This is why we're actually still beating and the rest of the segment is not, or the rest of the, sector is not, is because we continue to get so many new products out. Now, in the guidance and outlook, this is the most important part, okay? This is what's actually going to make or break the stock. Management expects a continuation of strong growth in the second quarter with an expected adjusted net revenue of $330 to $340 million, up 39 to 43% year over year. An expected adjusted EBITDA of $5 to $15 million, a massive improvement from what they expected from Q1. Management now expects full year 2022 adjusted net revenue of $1.505 billion to $1.51 billion. This is up from $1.47 billion. So very, very exciting. Adjusted EBITDA was supposed to be $100 million. It's now $100 to $105 million, just a little bit of a bump there. So management will further address second quarter and full year 2022 guidances on quarterly earnings conference call. I'll also be covering this, you guys already know. Anyways, guys, very, very exciting. I'm glad that I was able to actually bring this to you guys a little bit early. Who knows who's going to get a lawsuit from this? I mean, short sellers are going to be pissed if this actually brings up the stock a lot. So this might actually hurt SoFi in the short term, but whatever. I don't even care. They continue to innovate, put out new products, bring in tons of new members and new product growth over time. It's not about what this company is worth today. It's about what this company is worth 5 years from now, whenever the amount of numbers are not talking about, in the $3 or $6 million whenever it comes to member or product growth, but we're talking about 10 million, new members with 15 million products. Like that's really what I'm excited for. It's just, the bumps in the road on the way there, but this company is still growing very steadily. Anyways, guys, thanks so much for watching. Make sure you guys like the video and subscribe down below if you want to see more financial content just like this.